ready? Shall we start?
Yeah,
Yeah,
ready.
we're ready, but you are.
Yeah, let's start the session. First of all, welcome everyone in today's Binance Live AMA session. Thank you so much for joining us. And guys, like today we are discussing a major shift around stablecoin, tokenized fund, and what is mean for DeFi. So for a long-term, DeFi was like mainly built around a crypto-native activity like tax trading, lending markets, governance token, and I would say liquidity, mining, and a high APY strategy. And as we know that the stablecoin were mostly seen as settlement assets, something that user held between trades and use as liquidity pair. But that picture is changing because Open USD shows the stablecoin may no longer be only a neutral dollar token, but they are becoming a payment network, distribution channel, and potentially sharing infrastructure. At the same time, tokenized funds such as Circle, USYC, BlackRock, or Build, or Undo like USDY, and other tokenized treasury or bond product are bringing Wall Street style yield into the on-chain environment. So, according to recent market data, US YC is around the I would say $3 billion range, and Bill is also around 3 billion range, and USDY related yield pool have already reached meaningful scale. And like these numbers shows the tokenized treasuries, bond fund, and even the cash like collateral are no longer just a side narrative. And this creates a serious question for DeFi. If stablecoin starts sharing yield and tokenized fund become a major source of real yield, or can like DeFi still rely on the old model of incentives, governance token, and isolated liquidity pool? So all these are things we'll discuss. So to discuss this, we have the three major guests here. So without further ado, let's welcome them. So welcome here, guys. It's a pleasure to have you. Could you please introduce about yourself to our audience one by one, and then we discuss in more detail about the project. Go ahead, please.
Sure. So thank you for a great introduction. And thank you all for having us. I'm Paula. I am the CEO of AetheriumX. And I think this is actually a very important topic because DeFi is no longer operating in a purely crypto native environment, as we all noticed, and stablecoins, tokenized funds, real world assets, and institutional rails are changing what users expect from on chain finance. So happy to have this conversation today. Goran.
Thank you, Paula. Thank you for the great introduction. By the way, guys, for those of you that don't know me, I'm Goran. I'm a head of APAC marketing for AetheriumX. And from our perspective here, users and institutions are becoming more serious about stablecoins and tokenized assets. The market wants the opportunity, but it also wants transparency and clean risk explanation.
Yeah. Um, Hi everyone. I'm Mike. I'm the head of Americas. So for those that are not familiar with me, I'm happy to be here, and I think this is also where AI becomes quite relevant when it comes to DeFi, since it connects more institutional products and users tend to have better tools to understand yield risk, liquidity, and the execution behind it. So we're gonna go over the topics today, and I hope I can offer some insight from my perspective.
And that's really awesome. Thank you so much, guys, for your great introduction. It's a pleasure to have you. And let's start in detail about the topic. Let's see why yield is becoming the core question. So let's go deeper into yield, because we know in the past stablecoin were mostly used to move value or it sits in trading accounts. Now users are asking like whether stablecoin can also generate yield, or how can DeFi understand the shift. So let's start with Mike. Go ahead, please.
Yeah, so yield is becoming more essential because users are more mature now. In the last DeFi cycle, many of the users were chasing highest APY, without asking enough questions. So a lot of the yield came from token incentives, leverage, or circular activity inside the crypto. This is gonna create the growth, but it's also gonna make it really fragile. So if there's like a black swan event, um, things can go pretty sour quite fast. So now the market is gonna ask the users a lot more serious questions. What is the source of that yield that we are offering? Stablecoin yield can come from many places. It can come from treasury bills, tokenized money market funds, lending demand, liquidity provision, structured credit, basis trades, or protocol incentives. But all of the things that I mentioned, they're not going to be the same thing. So it's kind of complicated to say it's just a yield, right? So a 4% yield from tokenized treasuries is very different from a 20% yield generated through leverage or emissions. So you can guess which one is going to be more stable. The number alone is not going to tell you the full story, since the users need to understand the assets behind it and how the liquidity also works. Redemption is also important, the issuing risk, and the framework behind the regulatory incentives that are depending on the market that enable the token to be issued. So this is where DeFi is adapting as we speak. So DeFi cannot keep market yield as simple and say this is the stable APY number. We can try to, but it's going to be flexible. It needs to explain yield more clearly. It needs to help users understand the risk, and it also needs better interfaces, better routing, and better monitoring. So if the tokenized funds and yield sharing stablecoins become more common, then DeFi's job is not just to offer yield. DeFi's job is to actually help users compare different types of yield and understand what they are actually holding. So that is a much more mature role that we're talking about.
All right, yeah, Gara, thank you so much for answering that. And before that, I would also love to know your opinion about the Open USD and the new stablecoin competition. So, that stablecoin market has been dominated by USDT and USDC for a very long time. So, could you clarify, Miss Paula, like what make Open USD different, and why does it matter for DeFi?
Sure. The important thing about OpenUSD is that it shows how stablecoin competition is changing. So for years, stablecoins were, mainly judged by liquidity, trust, exchange adoption, and redemption ability. USDT became dominant because of liquidity and the global usage. USDC became important because of institutional trust and regulatory positioning. So OpenUSD brings another question into the market. What happens when stablecoins start competing not only on liquidity, but also on distribution and yield economics? I think that is a big change. A traditional stablecoin user usually holds the token, for settlement, trading, or payments. The reserve income is mostly captured by the issuer or the issuer's partners. But if stablecoin model allows more of that reserve economics to be shared with businesses, platforms, or ecosystem participants, then the stablecoin becomes more than a simple dollar token. It becomes a network with financial incentives. So for DeFi, this matters because stablecoins are the base layer of on-chain finance. They are used for trading, lending, collateral payments, and liquidity. So if the economics of stablecoins changed, the structure of DeFi changes with them. But we should also be careful. Yield sharing sounds attractive, but users still need to understand how it works. Where does the yield come from? Who receives it? Is it reserve income, protocol incentive, lending return, or etc.? how it's regulated, what happens during stress, and all these questions. So Open USD matters not because it replaces USDT or USDC immediately. It matters because it signals a new phase. Stablecoins are becoming more competitive financial infrastructure. Back to you.
All right, perfect. Thank you so much for sharing that. That's really interesting perspective, Miss Paula. So, if I can summarize it for our audience, you are saying that the competition is no longer just about who has the biggest stable coin, but it's becoming about who creates the strongest ecosystem around the stable coin, as I understand so far. And by that, could you also clarify, like, so the stablecoin itself is not only one part of the story. The bigger story is the network and the economics around it, right?
Yes, exactly. It's becoming distribution trails, not just settlement assets.
Mm-hmm. Yeah, got it. Thank you so much for that clarification, Miss Paula. And now I would like love to know more about the yields. I think we have discussed a bit about it also. Mr. Mike, could you clarify to our audience once again that, as the in the past, stablecoin were mostly used to move value or sit in the trading accounts. So now users are asking whether stablecoin can also generate yields. So how should DeFi understand this shift?
Sorry about that. My microphone was muted. Yeah, that's a good question. So yield is becoming a lot more important for the users since everything is getting more mature. In the last, so in the last, um, so in the last cycle, as I mentioned before, everything was a lot more different than what we have now, and we we keep trying to improve the tokenized funds, as I mentioned before, and the only way we can do that is through the experience and the lens of the users. So in my personal experience, when we work with the clients, it's kind of hard to explain to them how the situation has changed since a lot of them think Web3 is the same space as a couple of years ago, but it's not really the same thing. Web3 has changed significantly in the span of a couple of years. So if if people come to me and ask me what is the situation about this from a couple of years ago, I cannot give them the answer because, as I mentioned, Web3 is a space that is going to keep changing rapidly, and every single month, every single year, maybe something that used to be um, you know had like was really developed and top of the game is not going to be the case in the next couple of years, even months. So that's my answer.
All right, thank you so much for that clarification. So tokenized funds are expanding. So the DeFi has to move from highest APY wins to like best risk adjusted and best explained yield wins, right?
Yes, that's correct.
Okay, I got it. So yeah, thank you so much for that concise detail, Mr. Mike. And now let's talk about tokenized funds because we are seeing products like USYC, Bill or USDY or tokenized treasury, and I would say tokenized bond fund and tokenized cash or collateral products gain scale. So what does this do to the yields real yield narrative, DeFi real yield narrative? Ms. Paula, over to you.
Thank you. Very good question. I think it changes the meaning of real yield. In earlier DeFi, real yield usually meant that a protocol generated fees from actual usage, trading fees, lending spreads, liquidation fees, etc. That was already an improvement from pure token emissions. But tokenized funds introduce a different kind of real yield. The yield is not created only inside DeFi, it comes from traditional financial instruments brought on chain. treasury bills, money market products, bond funds, and cash management structures, right? So that is important because it gives DeFi access to yield sources outside the crypto cycle. When tokenized treasuries or tokenized funds become available on chain, DeFi protocols, can start building around more stable reference yields. So stablecoin holders, liquidity providers, DAOs, treasury managers, and institutions can all use these products as part of a broader on-chain financial system. But this also changes the nature of DeFi. If the yield comes from Wall Street rails, then DeFi has to deal with Wall Street style constraints, custody, compliance, permissions, issuer risk, and you name it. So tokenized funds are a double-edged development. They make DeFi more serious, more useful, and more attractive to institutions, but they also make DeFi more dependent on regulated issuers and traditional financial infrastructure. So that is why DeFi needs to adapt carefully. It should not pretend tokenized funds are the same as permissionless DeFi. They are different. But if integrated transparently, they can become very powerful building blocks. Thank you. Back to you.
Thank you so much. That's a very important distinction, Ms. Paula. So, if I understand correctly, real yield is no longer limited to revenue generated with crypto itself, right? And beside that, could you also make clarification on that? Like tokenized funds are expanding DeFi yield spectrum, but they are also bring new dependencies, right?
Yes, you are correct. So DeFi gets access to more real world yield, but it must also become better at explaining the structure behind that yield.
Yeah, got it. Understand. Okay, so now, Ms. Goran, let's see trade off. Like more projects are moving closer to Wall Street trail instead of like staying purely crypto native. So is that a healthy evolution, or does it like dilute DeFi original value? Over to you, Mr. Goran.
Thank you. So I think, in my opinion at least, it's both. It is healthy because DeFi needs more sustainable foundation. If the market only depends on token emission, short-term funding, and speculative narratives, it will keep repeating the same boom and bust cycle. However, Wall Street rails bring mature asset classes, regulated structures, institutional trust, and clearer yield source. Tokenized funds can make DeFi more understandable to institutions and more useful for users who want stability and transparency. But the trade off is real. The more DeFi depends on issuers, custodians, permission products, and regulated access, the less it looks like the early version of open permissionless finance and more like a centralized banking product. A user may still interact on chain, but underlying product could be controlled by a financial institution. The token may move on blockchain, but the access may depend on the QIC, jurisdiction, compliance rules, and that could be useful, but is not the same as fully open DeFi. So I think that DeFi is entering a hybrid space. One part of DeFi will remain crypto native, experimental, and permissionless, while the other part will become more institutional, regulated, and connected to traditional finance. The strongest ecosystems will be the one that connect those two layers honestly. They should not market institutional products as a full decentralized if they're not, because they can never be. They should remain and explain clearly what is on chain, what is off chain, what is permissioned, and where the risk sits.
All right, that's absolutely amazing. I think that's really an interesting way to frame it. I think that's an important message for everyone watching. I believe like that level of transparency will be essential as DeFi continues to evolve. So appreciate the detail. Other than that, so DeFi does not need to reject Wall Street trail, Mr. Goran, right? I'm like, but it should not lose its own transparency or user control. Is that okay?
Exactly. DeFi should absorb what is useful from traditional finance, but not become just a new interface for the old system. Thank you. Back to you.
All right, exactly. Thank you so much for frame it so well. So now let's focus directly on adoption. If Open USD or tokenized fund or institutional yield products keep growing, what does DeFi need to change? Over to you, Mr. Paula. Mrs. Paula, go ahead. Yeah.
I think DeFi needs to adapt in several ways. But the biggest change is, however, the mindset. DeFi cannot rely only on being crypto native as a value proposition anymore. Users now compare DeFi products, with stablecoin yield, tokenized treasuries, fintech apps, exchanges, and sometimes even traditional money market products. That means DeFi has to become more useful, not just more exciting. The first adjustment is yield transparency. Users need to understand where returns come from. If yield comes from tokenized treasuries, say that. If it comes from lending demand, explain that. If it comes from incentives, make that clear. If it comes from leverage or structured credit, users should know the risk is different. The second adjustment is risk communication. DeFi products often show API very clearly, but risk much less clearly. That I believe has to change. Users need to understand liquidity risk, smart contract risk, issuer risk, redemption risk, and regulatory limitations. This is very important. And the third adjustment is better integration. Tokenized funds should not just sit on chain as isolated assets. If they are going to matter, we need to connect with lending markets, collateral system, treasury management, liquidity routing, and maybe eventually prediction markets and AI-assisted strategies. The fourth adjustment is user experience, obviously. The more complex the product becomes, the more important the interface becomes. Users should not need to be financial professionals to understand the basic risk and function of a product, right? So this is where I think AI can help, not as a like black box trading engine, but as a decision support and risk awareness layer. So to sum up, for AetheriumX, this is very aligned with our direction. We see the future as a more intelligent on-chain finance environment where users can interact with DeFi, predictics, GameFi, stablecoins, and future real-world assets mapping with better information and much better execution support. Thank you.
Thank you so much, Ms. Paula. Great explanation. So, DeFi needs to become more professional without becoming less transparent, right?
Exactly. The challenge is not just integrating institutional products. The challenge is making them understandable, useful, and trustworthy inside Web3.
All right.
Back
Yeah.
to you.
Yeah. Got it. Got it. Thank you so much. Okay. So now my next question is to Mr. Goran. So from an APAC market perspective, how do you think user and institutions will respond to yield sharing stablecoin and tokenized funds?
Okay, so let me start with this. APAC will be very important, but the response will not be the same in every market. In Singapore, the conversation is more institutional. Tokenized funds, compliant stablecoins, and RWA products fit naturally into the finance infrastructure discussion. Institutions want to clarify report, custody, and regulatory alignment. In Japan, though, trust and compliance matter a lot. Users and institutions want products that are clearly structured and responsibly communicated. Yield alone is not enough. The product needs to feel credible. In Korea, retail energy is stronger. Users may move faster, but they're also becoming more selective. They want an opportunity, but they also care about access, liquidity, and the product quality. In overall emerging Asian markets, stablecoins may be more practical. They can be used for payments, dollar access, settlements, cross border value. Tokenized funds may come later, but stablecoin adoption can create the foundation. So, for the DeFi projects, regional strategy matters. You cannot explain Open USD, tokenized funds, or RWA in the same way everywhere. Some markets care about institutional trust, some care about yield, some care about payment, some care about access. And this is why DeFi needs to adapt. Global products still need local explanation and local access strategies. Back to you.
All right, that's superb. Thank you so much. That's a great regional breakdown. So, the product may be global, but the adaptation is regional, Mr. Goran, right?
Correct.
Okay.
This is one of the biggest lessons in Web3 I can teach anyone right now.
Mm-hmm. Yeah, got it. Thank you so much. And now, my next question is for like Mr. Mike, because he mentioned AI earlier. So, as DeFi becomes more connected to tokenized funds, stablecoin yield, and institutional assets, where does AI fit in? Could you please clarify?
Yeah, thank you. That's a good question. As Goran mentioned a lot of the things before, right? I'm gonna add on that. So AI is becoming more important because the market is also more complex, as we spoke about that before, right? So in the old DeFi model, users could simply look at a pool, see the APY, check the TVL, and make a decision, which was already risky by itself, but it was kind of simple, right? So now the users compare USDT, USDC, Open USD, USYC, BDL, USDY, and other lending pools, tokenized treasuries, stablecoin yield products, and different DeFi strategies. Each one has a different structure and a risk profile. So that is too much for most of the users to go over manually, right? Like even for experienced people, it's kind of overwhelming, just the number of options. So AI can help by turning complexity into understandable information. It can help compare yield sources. So, an example, you can make a chart explaining how much you can get from something and compare, side by side, unlike before. You can also summarize risk, uh, monitor the liquidity, analyze issuer exposure, detect abnormal market behaviors, and guide users through execution paths. But I'm going to be clear with you. AI should not be used to hide responsibility. It should not say trust the model. It should show users why something matters. So for AetheriumX, the AI native DeFi means decision support, execution assistance, risk awareness, and better information processing. So it's not just about promising automatic profits. You still have to do some risk management yourself. If tokenized funds and yield-sharing stablecoins become a major part of DeFi in the future, and now in the near term, then users will need an intelligence layer to understand the environment. AI can become that layer if it is designed transparently. So that's everything from my side.
All right. Yeah, got it. Got it. Thank you so much for that answer. So, I'm like, that's a very excellent point that you just highlighted to our audience. So, instead of like asking people to blindly trust AI, you are talking about AI that actually explains the reasoning behind every recommendation. So, we can like summarize it like that: AI is not replacing DeFi user, but it is helping them to navigate a more institutional and complex DeFi environment. Am I correct?
Yeah, exactly. The future DeFi will not only need more products, it will need better interpretation from the user and everyone involved in the process.
Yeah, got it. Thank you so much for that detail. And I think we have covered all the possible detail today. That has been a great discussion. So the key takeaway is that Open USD and tokenized funds are not just new products inside DeFi, guys, but they are changing the environment around DeFi. And Open USD shows that the stablecoin make compete through distinction or reserve economics or payment or yield sharing model. And the tokenized funds like BEL or USDY shows that the real yields increasingly connected to tokenized treasuries, bond funds, and cash like collateral. This create both opportunity and pressure, and the opportunities in that DeFi has become more useful, more transparent, more compliant, and more attractive to institution and mainstream user. And the pressure is that the DeFi can no longer rely only on APY governance tokens and crypto native liquidity games. It needs better yield expansion explanation, better risk communication, or better product integration. So thank you so much, guys, for all these discussion. I really appreciate it. Thank you so much for your valuable time. And as we wrapping up, do you want to say something to our users, to our listener, before closing this discussion or today's session?
So thank you too as well for leading this discussion. What I would like to say to sum up is I think the most important point is that DeFi does not need to reject institutional rails, but it has to adapt without losing transparency and user control. So that's from my side, and maybe one of our guys has also something to sum up.
Thank you for your time today, everyone. And the next phase will depend on trust, localization, and clear communication. As an APAC marketing director of AetheriumX, it was my pleasure to be with you today. Thank you, guys.
Thank you for having me. I hope I explained how the DeFi will become an important part in the AI world. I hope the people listening might get something out of this, and I'll see you around next time. Thank you so much.
All right. Thank you so much, everyone, for watching us on Binance Live today. Please do follow AetheriumX for more conversation around DeFi, stablecoin, RWA, AI, and much more. To follow them, and if you miss any part of the session, don't worry. You can replay it. You can replay it later on. It's recorded. And if you have any question around the project, please reach out to them. Their community manager or their lead member will definitely going to guide you or assist you anytime. And that's it for today, guys. We'll see you next time. Have a great day. Bye bye. Thank you so much.
Bye bye, everyone.
Bye bye.
See you next time.
See
See you
you.
next time.